Hello, who are you? Bonjour, are you aware where I am? I'm in Hanoi. Oh my god, when did you return? How long to stay in Vietnam? Oh, just got back, no time for fun yet. The company sent me on a 6-month assignment, and I'm a bit confused about how to handle taxes. Oh, there's a tax master next to Bao. Let Bao ask for you. Could you help me out? So let's arrange some free time to meet up soon, okay? Okay, I'll text you later. Hey, Bao's acquaintance in France, who already has French citizenship, and is on a 6-month business trip to Vietnam. How does he handle personal income tax, Lem?
For 6 months, within the 183-day period, it falls under non-resident status, so you just calculate personal income tax for non-residents.
How do you calculate it, Lem?
To begin, Step 1. Bao needs to determine his residence time in Vietnam and other factors like lease agreements and working hours. Step 2. After determining the taxpayer's residence status as a non-resident, Bao needs to list the income received, identify taxable income, and allocate if necessary. Bao should know that as a non-resident, only income generated in Vietnam is taxable, and he only needs to pay tax on the taxable income portion. It means the income he receives from work in Vietnam, regardless of which company it's from or where he physically works. For example, that friend is French, working and receiving a salary from a company in France, and has been assigned to Vietnam to provide services for Vietnamese clients. Or he may still be in France, but providing online services for Vietnamese clients. In both cases, the income paid by the French company for his work, whether he is physically in Vietnam or providing services online, will be considered income generated in Vietnam for him.
So, determining the work in Vietnam is the key, regardless of the physical presence of the worker, right, Lem?
Exactly. Bao is getting smarter now. There's one more thing Bao needs to note, that in the case of a non-resident having worked both in Vietnam and abroad, but unable to separate income generated in Vietnam, he will have to perform allocation. To perform the allocation, there are 2 scenarios like this. Case 1, when the non-resident is physically present in Vietnam. In this situation, the income generated in Vietnam is determined by the number of days the individual is present in Vietnam divided by 365 days. Then, it is multiplied by the income from salary, global wages before tax, and other taxable incomes before tax generated in Vietnam. Case 2. Non-resident without physical presence in Vietnam. In this case, the total income generated in Vietnam is determined by the ratio of the number of days worked for the job in Vietnam to the total number of working days in the year. It is then multiplied by the income from salary, global wages before tax, and added to other taxable incomes generated in Vietnam. After identifying the taxable income from salary, interest from banks, and business income, then, we will determine the deductions and exemptions that he can enjoy.
Do foreigners also have deductions and tax exemptions in Vietnam, Lem?
Of course, for example, bonuses for weddings, health insurance premiums, or deductions for family, personal, and child-related tax benefits. In general, the more deductions, the less tax to pay.
Oh, our government is fantastic, creating favorable conditions for workers.
Exactly, that's all. Once you've identified the details in Step 2, then it's on to Step 3 to calculate the tax owed.
Hey, Lem is top-notch.
That's right. Bo remembers reminding you not to forget to declare and pay taxes on time.
Okay. Allo, visit the My Bao channel to watch the video by my Bao and Thi Lem on personal income tax for foreigners in Vietnam to get the information.